morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well. We got football tonight, right? Thursday night football. We got college football. I mean, we got baseball. The playoffs are coming up. We got the election, and we had the debate this week. We had inflation data yesterday. We heard from all the banks talking about all their troubles. The Dow was getting hammered, but NVIDIA saved the day and got some rallies going. We've got all-time record high. Gold is through the roof here. We've been telling you, listen, it's just getting started. What are you waiting for? How high are you going to let prices go before you figure out, hey, this is the place you need to be? Our toll-free number, 800-951-0592. The website at allamericangold.com. And, yesterday we had the inflation CPI number. They were a little worried because the core CPI came in hotter than expected. But at the same time, today we got the producer prices, and we also got jobless claims. Jobless claims, 230,000. So kind of right where we've been at. Almost like they're saying, hey, layoffs? What layoffs? We haven't seen any layoffs, bankruptcies, closings. It's people are starting to question, are the numbers just bad? Are they wrong? And of course, our Fed, hey, we're data dependent. Well, if the data's no good, how are you supposed to be making these moves? As far as PPI goes, producer prices up 0.2% month over month. But the good news is the year-over-year number was down to 1.7. The core PPI, also hotter than expected, up 0.3%. They're saying that energy led the things down. Everything else pretty much was up. But the gold has just taken off here. Gold's right now up $53. Yeah, you heard. Oh, I'm sorry, $43. Got a little excited. $43. 25.55. Silver. Wow, silver's up almost $1 here, over 29.5. We've got mixed pricing right now on Wall Street. Again, NVIDIA saved the day yesterday. Think about how crazy one stock. This is part of the Mag 7 stocks. I want to say it was over $250 billion in NVIDIA yesterday to kind of help Wall Street recover as it was getting hammered yesterday after the news broke from Ally Bank talking about defaults worse than expected and continuing to get worse. And they even made a note. Job losses are becoming a problem, but we're not seeing that in the data. And then Citigroup said, hey, all this credit card spending, it used to be on stuff, this is how much information the banks really have, right? They know what we're buying. You use that credit card, they're buying all that data, and they're like, hey, it used to be for leisure, right? Oh, we're going, we're booking flights. We're staying at the hotel. We're buying, camping gear, or we're going to buy a boat, or things like nice to have. And they just said, hey, all of that changed. Now they're buying groceries with it, gas with it. And of course, their CEO said, we've seen this before. That just leads to more defaults because now they're buying things that they actually need to have, which means they're out of money. We got bankruptcy filings for the month of August. And just like we expected, one of the highest numbers in August. I think it was the third highest August ever, only barely behind 2020, right? So COVID, August 2020, there was obviously a lot of bankruptcies. People hadn't gotten their money and all that stuff yet. But outside of that, Jason, bankruptcies now going back, right? We're back to the last cycle, right? The financial crisis. And then, of course, the ECB started the rate cutting. So the ECB today, they cut rates. And Jason, we're expecting the exact same thing out of our Federal Reserve when they have their next meeting here to be cutting rates.
Yeah, I think you called it right, Joe. I mean, you've been saying all year that they were going to, well, you've been saying most of the year that September is going to be a quarter-point rate reduction, and there's been information since you've been saying that, but it's kind of all settling, isn't it, right into that quarter point coming up here soon.
Yeah, and I think, I've been saying, hey, I think it was going to be two cuts, one in September, one in December. I'm going to tell you right now, that is probably, I'm light, right? Right now, the main, people on Wall Street expect the Fed to cut rates every meeting for the rest of the year. Now, they only meet every 6 weeks, but essentially the Federal Reserve will cut rates at every single meeting. But here's the funny thing, because the core was hot in the CPI yesterday. Today, both the month over month, the 0.2, that was hotter than expected. The core was hotter than expected. The year over year numbers tended to look good. But the problem with that is, as we get into 2025, those numbers are probably not going to look as good anymore. Patriot Radio News Hour. We'll be right back. 800-951-0592. The year of chaos, and man, has it lived up to its name. A quick look at the markets. The Dow is flat today. The S&P's up 17. The Nasdaq's up 100. Again, the big news out of NVIDIA yesterday, talking about AI chips and the battle, if you will, of these tech companies to buy these chips. And NVIDIA is basically saying, hey, it's getting very tense, that everybody wants them and everybody wants to be first. They don't have enough chips to go around. So it was a very bullish statement in talking about how their customers are getting aggressive, if you will, in the chip base. By the way, the 10-year note, 369. So the 10-year note coming up. And again, it's been as low as 3.6. It's just the size of these auctions. The amount of debt that needs to be sold continues to be a problem in trying to drive all of these rates down. Gold or oil's up a couple of dollars. We had a hurricane hit there in Louisiana, shutting down some production. It wasn't a big one, thankfully, but we'll see how it reacts next week. As we've been telling you about gold, right now gold's up 40 at this very moment, $2,552. Silver, again, here comes little brother, up 94 cents now, $29.60. And again, be ready. Get going. What are you waiting for? Don't be reactive. You need to be proactive. It's just how it has to be. Reactive means you're going to be late. We know the setup. We're seeing all of these signs, right? I mean, I've been doing this a long time, seen the Fed cutting rates when stocks, they're not at all-time highs, but they're right next to it. I mean, right? Stocks are right next to all-time highs. The unemployment rate, it's at 4.2%. It's not horrible. I mean, if you take away the after COVID stuff, this is a historically a really low number for unemployment, 4.2. They said GDP was 3% last quarter. Not last year, last quarter. Now, are the numbers right? I don't know. But this is something where, again, I'm telling you, this is how big of a bubble we're really in. They've got to do everything they can to try to save this. And I'm going to tell you right now, it's not going to work. It's never worked. Get diversified. You need to be calm. We're running ridiculous pricing on gold. You need to be buying it and buying it and buying it. Silver, same thing. I mean, we're literally telling you what the price is going to be. Right? We've been telling you what the price is going to be. And it's doing exactly what we said. And then we've been telling you about why refi. Right? If you've got $50,000 or more, you need to make a call. Especially if you got a lot of money in an IRA, I'm telling you, take some of it, give it to Y refi, and know you're going to have income. Up to 10.25%. This is the year of chaos. This is a good year. But it's almost over. Matter of fact, as far as the federal government's concerned, 2024 ends at the end of September. We're going to add between now and the end of the year another $1.5 trillion to the debt. I mean, it's going to be $37 trillion. And we're hoping, fingers crossed, that it's not $40 trillion next December. Right? We're hoping that it's only $39 trillion and change. Get more diversified and stop messing around because you're out of time. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or just call them 888-Y-REFI-24. And believe me, when they explain to you how it works, you're like, oh my God, that's genius. It's not correlated to Wall Street. That's the win. Doesn't care about the ECB. It doesn't care about producer prices or CPI or PPI or Fed talks, Fed minutes. It doesn't care about any of those things. Heck, you know what? It doesn't even care about gold, believe it or not. Check them out. 888-Y-REFI-24. And Jason, everybody and their mother now. Let's raise our gold forecast. It broke to the upside. Oh, shocker. Shocker. ING now. The latest saying, okay, we were wrong. Double was right. Jason was right. They're now saying gold is going to average $2,700 in 2025. And I'm going to let you in on a little secret. Okay, you ready? A little secret. Probably going to be higher than that. And that's the average price. So imagine right now we're at $2,550. So that means gold's got to go up another $150 just to get to the 27, right? And then, of course, I'm already telling you, listen, we're going to have $3,000 gold, and really, unfortunately, the rally's just getting started. They're saying Federal Reserve has no choice. They need to cut rates. Gold is a non-yielding asset that tends to benefit from a lower interest rate environment, right? Because remember, back in the day, I remember when I first started doing this, and they used to say, Jason, like Warren Buffett, I don't like gold because it doesn't pay interest, right? Remember those lines? Well, guess
I remember.
What, right? Guess what? They can't afford to pay you any interest. The banks can't afford it. You know why? Because they got to stock up on their loan loss reserves. right? They can't afford to pay interest, and the Fed can't afford it. Heck, our federal government can't afford to pay interest anymore. And this is why I think you're seeing everybody out there starting to get really serious about where gold is heading. Yesterday, a big announcement out of Africa where, we still, all of these countries, they've got gold mines there. Remember, South Africa used to be a huge gold player, not nearly as much. They've run out, right? So they're down the list. I think they're like the 9th. Now, think about this. I think when I started, they were still the number one producer of gold. I think they're down to 9th. But news out of Ghana yesterday saying that they are starting to buy their own gold instead of putting it out onto the open market. And then they went on to say that the African gold producers in general, they've all been ramping up. But what they're saying, what the producers are saying is the countries are buying it all. They're not allowing the gold to get out of the country like they had in the past. And remember, all of these African nations, and I don't want to say all because there may be a couple of holdouts, but 80, 90% of these countries, Jason, they all want to be part of BRICS. And here they are now making these announcements that, hey, we are going to be buying our own gold out of our own mines, putting it in our own central bank. And remember, was it earlier this week, or may have been last week, leading up to the next BRICS summit, we know the BRICS bridge payment system is coming on board. And then India is saying, listen, we've kind of agreed in principle that we are going to start trading in each other's currencies when we buy things, and then kind of let it get out there that there is going to be some kind of gold backing in their basket. So they're going to say, hey, all the BRICS nations, hey, if you're part of BRICS, your currency can be in our basket, but we're going to have some gold backing. Now, some people are throwing around 40%, and I was like, man, that's a huge number. They got to buy a lot more gold. But Jason, they don't have to buy a lot more gold if the gold price keeps running like we've been seeing.
Yeah, that's right, Joe. That's right. It's I'm not falling into the BRICS trap. I think there's a lot of fault in that system, but the fact that there is an alternate system makes it a real situation that's going to change and make people look at an alternative. And so I don't know, Joe, if the BRICS can do that at all. I don't know. To me, there's so many countries joining the BRICS nations. I don't know how they're going to balance which assets should be in the basket of commodities if they decide to do that. I'm not sure how they're going to get all those countries to agree. I don't know, but it's all bullish for gold, right? It's all bullish for gold, no matter if it's a fake situation or if it's a weak situation. It's obviously organized, and then the BRICS have been around for a while. It's not like the BRICS just popped out of nowhere. This has been going on for a while, so they're strengthening. Right. I mean, Joe, gold has been hitting record highs in such a way. Well, warning.
Gold's hitting record highs. Warning.
Gold has been this year, and I was looking back, it's actually been longer, but this year it's been heading record highs so regularly. I'm starting to forget what is the record close now? Is it 25, 25, 25, 30? What is the record close?
Record close, I want to say, was 25.25. Right now, we are now at 25.55, so this will be $30 above the record.
The reason I brought it up, Joe, is because I was looking at, gold hit $2,000 in 2020 during the COVID, right? And then it tailed off. And then it hit $2,000 again in 2021. It tailed off a little. Then in 2022, it hit $2,000 again, and it tailed off. But since it kind of came back in 2023, and I'm looking at the number, October 4th, 11 months ago, all it's been doing is tailing up. And I'll get that salt on the next break. Somebody really wants to get a hold of me right now. I'll get them on the break. Gold was $1,834 11 months ago. And it just crept up. Remember late 2023, it hit that 2,000 again. So in 2023, it hit 2,000 again. Remember, Joe? Kind of went sideways till February, and it just keeps hitting record highs, keeps hitting record highs. There's no dip here. It's going straight in a positive direction because there's too much inflation. There's too much economic indicators that are going to push gold. In fact, I don't know any economic indicators right now, Joe, the way things are set up, that are bad for gold now.
Right.
I mean, I guess if they raise the rates really, really super high, and they took a whole bunch of money
they're
out of
cutting rates, right? They're not raising, right? They're trying to get more money pumped in. And the thing about BRICS, like we said, I don't know. Okay, but they're getting organized. They've been around a while. They've been very selective on which countries they're allowing to join. I think what they're going to have is a core group and then probably this ancillary group that, hey, yeah, you're part of BRICS, but you're you're BRICS light, right? In other words, these are the currencies you can trade in. But here's the thing. This is the important part. Every single one of these just means we're going to stop using dollars. Not altogether. Are we going to go to zero? No. But we may cut dollar usage by 20%, 30%, 50%. That's the issue. 800-951-0592. Patriot Radio News Hour, Joe and Jason. We had, yesterday we ran that special with the 10th ounce and the gold eagles. It's an inheritance thing that we're gonna handle all of the product. I still have some gold eagles. Now, yesterday we're at $2,585. Gold's up $43 right now. Tell you what I'm going to do. So, anybody that is interested, and remember, you got to pay for them, and you can mail us a check. If you're in Phoenix or Colorado and you want to bring it in Monday, that's fine. I mean, you don't have to pay, oh my gosh, I got to come down there this second. No, but you gotta pay for it. We'll have them in a couple of weeks. I'll just do this. I'll do this. $25.95 on the remaining gold eagles spots. $25.55. So that's $40. That's actually below cost. Yesterday we were right near cost. Now this is actually below cost for an ounce of gold. Scoop it up at 800-951-0592. We've been talking a lot about Warren Buffett and dumping Bank of America. Well, guess what? Today, the vice chair of Berkshire Hathaway sold, I want to say, over half of his Berkshire stock. And again, when they do this stuff, they've got to tell you, because they're executives in the company. And you got to remember, Berkshire, they are very consumer-based in their holdings of companies that they own. They own a lot of furniture companies, the Geico, right? Things like very consumer-driven. Jason, here's another sign. Things are starting to really look rough, and what we're seeing right now with a lot of these companies, the CEOs, the CFOs, the chairmen, right? A lot of stock selling's going on with the big boys. We talked about Jamie Dimon, right? Now he unloaded a bunch of his stock. He had never sold JP Morgan stock before, and he's selling it now.
And of course, we wouldn't know for sure. But why do I get the feeling some of that money is going into gold? None of these guys like to talk gold. They hate gold. They hate gold. But man, if you can sit them down and have a conversation, hey, it's between you and me. Are you putting any of that gold? I mean, Joe, I did the numbers slightly on the last segment. It was 1830 gold in October. Then in November it was 1930. In December it was 2030. Then it went sideways for a little bit, and then in March it was 2130. Then it was 2330 well, I would say 2300 in April and May, and it just keeps going. Then it's 2400 a month or two ago. Now it's 2500 going to 2550. It's not stopping. And I know, Joe, the one thing I keep hearing about people that are not buying, that are waiting, they're waiting for some sort of pullback, which I guess could happen, Joe. But economically, the things that you talk about every day, the things that we bring to the air, is bullish in every direction, except for rate hikes with money reductions. You know, the federal government, the Treasury, can just pull money out of circulation. They can just let loans get paid off. That's how you destroy money. When the balance of the loan, the equity is getting paid down. That's actually money destruction when loans get paid down. They could just let that happen, and gold will go down. Because if the money supply goes down, gold will go down. I don't hear anybody talking about having less money. All I hear the government saying is spend, 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 spend. And if it's Republican, okay, we'll spend a little less than you. Well, that's still a lot of spending, Joe. So that is a huge movement in gold just from 11 months. I mean, think about that, Joe. 1830, now we're at 2550. 11 months. You know, we get $500 movements every 11 months, Joe. Gold's going to be at $3,000, $4,000 in a year or two.
And here's the thing. This is the problem, is gold was undervalued, and we knew that. We all knew it. And like Jason said, well, 2000, that was a very psychological type number. And now that we're through it, unfortunately, I think we're setting up here, and matter of fact, I just saw flashing across my screen here, money now pouring into the gold ETF. This has been the only place that money wasn't going, right? Remember, the ETF, all year, up until I think a month ago, they were still selling, right? They were selling their paper gold. ING now saying money is pouring into the gold ETF. So that's a place where, again, there was at least some supply coming to the market because of this. And they're saying, hey, this is just getting started. The ETF, the paper gold guys, they're way behind. Don't be surprised. Do not be surprised if gold's up $1,000 from here next year. Don't be surprised at all. The amount of money now, listen, Canada's cutting rates, Europe's cutting rates, China's cutting rates, we're cutting rates, right? What does cutting rates mean? That means we're trying to get more money in the system. We're trying to get more money in the system. I'm going to tell you right now, if we get to the end of the year, between now and the end of the year, I think you're going to hear Jay Powell say we're going to end quantitative tightening, because they're still technically selling like $25 billion a buy. That's going away. That's another move for gold. I think we're going to see in this dot plot at the next meeting, we're going to see people looking at interest rates where right now they're between 5.25% and 5.5%. I think we're going to see some dot plots at the next meeting where people will have interest rates at 3.5%, maybe even 3%. That's 8 rate cuts if they did 1/4 point at a time. There might be one guy out there with 10 or 12. And I think this is something where we're starting to get consensus that all of these central banks, again, in unison, in concert, are trying desperately to not have another major crash like they did with the financial crisis. But Jason, I think it's unavoidable. I really do, and I think this time it's going to be more different this time, because last time, remember, gold did fall with with stocks the last time, nowhere close, not nowhere as bad. But this time around, we may actually have gold rising with the crashing market, which would be much different. Patriot Radio News Hour will be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday, and during the break, as expected, another price increase. So gold this morning was like $25.35. Now it's $25.55. Prices continuing to go up here. I've got like 10 gold eagles at $2,595. Scoop them up. For those of you saying, well, what do you got in the old gold? $10 Indians. Listen to this. $13.95 on $10 Indians. Two of those would be $27.90. $2,790. A $20 gold piece is $2,785 right now. This is, Jason, this is insane. I'll tell you what, if you buy 20 $10 Indians, I'll take them down to $13.90. I don't know if we've ever, get two $10, once in a while you had the $10 liberties. Get two $10 liberties for less than a 20. You don't get two $10 Indians for less than a 20, but you can do it today. So we got a couple of options. 1 ounce gold eagles, $25.95 until they're gone. And then after that, they're over $2,800. The $10 Indians, 1 through 19, $13.95. 20 or more, $13.90. And I know the girls are listening, so I've just been raising the prices again. So girls, make sure you capture that here. 800-951-0592. And Jason, again, another breakout to the upside here on gold. The next target, right? The next target now is going to be 2,600 already. December gold is almost at 2,600 already. And like I said, I really think we're going to see $2,700 before now and the end of the year.
We've said it so many times this year, but we need to we need to stress it, Joe. We just keep stressing it. Record high gold today. Right now you're listening, record high gold. Joe says it kind of nonchalant, just kind of, because it's been so many, how many days this year have we had record high gold? Because it is moving up slowly. It's not moving up super fast, Joe. But I would say 24 days. At least a dozen days, if not 20 to 25 days this year, we've had record high gold. It just keeps happening, and I don't see, Joe, why it should stop with everything that's going on outside of gold that would affect it. And then, of course, the economic numbers that's inside gold. It all screams of gold that's just going to keep going. And I think the fact that it's moving slow, Joe, is trying to keep a lot of people to not notice it. Don't look at it. It's just moving so slow. Just don't look at it, right, Joe? Don't look at it. Don't worry about it. Go look at something else. Go watch the presidential debate. Worry about that, right?
Yeah, and again, I think the problem is, right, it's not scary yet, right? And people are distracted with the presidential election. I'm telling you, they're not going to tell you they're panicked. But Jay Powell's panicked because never, ever, ever have they ever talked about cutting interest rates with an economy where allegedly, like we talked about at the beginning, 3% GDP, unemployment still relatively low, right? There's huge cracks coming. And when you look at what the banks said this week alone, and it was a symphony. It was all of them. Banks like Ally, moving the markets in the financial stocks. Jason, a quarter of a point, and I think everybody knows it's not going to save anything. Matter of fact, listen, the interest rates have already moved down in anticipation of the cut. Did you see housing sales go anywhere? They didn't. No. Still can't afford it. People are out of money. Be proactive. Take advantage, because here's what's going to happen by the time the fear gets here. Why do you want to pay another $200 an ounce by waiting till, I want to see who wins the election? Well, by then, gold's going to be $2,700. Don't wait. 800-951-0592. I mean, you can. I mean, let's face it. You're going to call. Might as well call when it's lower. But we've been saying it all year, right? I've been saying it since January. You better buy it now. The longer you wait, the more expensive it's going to be, because, like Jason said, unfortunately, we're in this scenario. It's crazy.
It's just moving.
Every scenario is good for gold. That normally doesn't happen. That's not supposed to be how it works. It's supposed to be, well, this scenario is good for gold, that scenario is bad for gold. And you didn't know. Here we know. Every scenario is going to be good for gold, at least for the next, I don't know, a year, 2, 3, 5. You decide. We'll see together. I saw somebody yesterday, one of the banks was talking about 4,700 is probably where this run stops. ING today, the gold run is just getting started. See, this is kind of the hard part, because people are like, well, gosh, wait a minute, it's gone up $500.
It's too expensive.
Yeah, it's just getting started. Patriot Radio News Hour, final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Thursday. Gold's up $43, $2,555. Silver's up $1. I don't mean to laugh. It's just, that's what silver does here. $29.66. So silver now getting ready to jump back over $30. And again, I think kind of broke through that $29, heading higher. Right now, the Dow is down 65 points. The S&P is flat. The NASDAQ is up 30, as today wholesale prices came in hotter than expected on the month over month. But the year-over-year number was down, so that made them happy. The Microsoft announcing they're cutting jobs today, 650 jobs in their gaming division. So that, right, kind of tells you, well, why in the game? Well, because that's extra money, right? Hey, I'm going to buy my kid a video game, No, can't do it. And then Price Waterhouse Cooper announcing 1,800 layoffs. It's the first time they've laid anybody off since 2009. Right? So this is kind of a big deal. This is not a company that lays people off. Of course, they're a big auditing firm, part of the Big Four in the auditing category. And then BurgerFi, it's kind of a regional hamburger chain. They just filed for bankruptcy. And of course, remember, we talked about Big Lots filed for bankruptcy officially this week. We'll see how many hundreds of more stores they add to the closing list. Right now it's 315. But Jason, it's one of those situations now where I don't think it really matters. The central banks around the world have decided we need to get money flowing again. And I think we're going to be very surprised at the amount of rate cuts we're going to see this year into next year. I already just said it this morning. Okay, I'm throwing my 2 cuts out. It's going to be 3, and I'm not even ruling out that the third one may be a 50 basis point cut if things go the way they could.
Yeah, we're going to get artificially lower inflation numbers through the end of the year into early next year, and then that'll stop. Joe, I think food inflation, watch that, because that's one that's just not going to be artificial. You don't have to buy Christmas presents, and the big box stores can lower their prices and make things look like they're lower prices, but you can't lower the food prices, Joe. I think if food continues to rise in price all the way through the end of the year and going into next year, watch out for overall inflation next year, which is going to blow this thing up. Like Joe said, we could have 3,000, 4,000 gold next year. It just depends on the emergency. And if you can't afford to buy gold, then buy silver. If you can't afford to buy silver, and we know we got everybody listening to the show, put yourself in a position to be able to buy silver and start doing this quickly. Do not buy gold and silver with money that you're going to need next month. Right, Joe? If you need this money next month, don't put it in gold and silver. There's premiums, and there's you have to get into this space as a savings and hold it for a time. And Joe, it's about how many ounces, not about how many dollars you got. It's not too expensive. It's about how many ounces do you own, Joe, and how many can you get, right?
That's it. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.